Very good morning, friends and traders. I'm welcoming back to my channel, Smart Index Edge. I'm Nalnakshi Swami. As routine, let us analyze the Nifty for today's trade. If you observe the trade from Monday, Tuesday, and Wednesday, Monday, Tuesday seem to be within a range, and Wednesday expanded above the range, above these two Monday, Tuesday range, and it was a huge move, and finally closing back into the range. The market has not done anything. It has closed within the range. Although it appears it has made an higher high. Though it has made an higher high, the closing within the range indicates nothing has happened. It was just a game of call option and put option where the premiums were played within that game. Here, the analysis is what the market is doing. If there is a range, there will be above this range, there will be liquidity. Liquidity of the usually the call writers were induced in this range. When they were induced in this range, the makeshift belief was that premiums will be decayed. The thing is, they pumped up the smart money, pumped up, grabbed this liquidity, and made people to believe that it will go higher. It should have closed. If it were the intention was to go higher, it should have closed near the high. Instead of that, it has closed near the open or below the open. Open is 25,136. Yeah, it has opened around 25,135. Let me go to the daily chart and see. If I place the cursor 25,134 and closed around little bit above the opening price. So VIX has cooled off. Day by day it is cooling off. It has come down to 13.67. Based on the VIX values, the levels to watch out is 24,961. Actually, I expected the market to come down and take the support and rally. Instead of, this was the level, it is constantly, it is stable, it is plotting the same thing. And 25,321 on the upper side. Low to be 24,961 and weekly low to be 24,664 and weekly high to be 25,618. Here, after the huge rally, the market has stalled over here. If you measure the move, let me measure this move. It was, if I take this, it should have gone to this level. Here, in this move, there was a lot of drama played over here. Today is expiry. Expiry, this bottom 24,961 is your support. You can see from here the market has rallied. This will act as support and this will be resistance for the trade. 25,321 is the resistance for the trade. The market can come down. It may give you it may give you some sort of, it may grab this liquidity like this, beneath this, and then it may make another attempt to move higher. Only if it breaks below daily low of 24,961, it can move down to 24,887. But the thing is, the drama is within this range. Probably today also, we can see the levels within the daily low of 24,961 to 25,321. We need to see how the market will play the game. So the play is still on. It is not gone. So today the range will be within this. Any dip, suppose if it gives a dip in the morning, that will be a very good opportunity. Early in the morning, if it starts moving sideways without any direction for more than 1 hour, then premium decay will happen in the market and the market may expire within the range. There may not be any volatility game. Already volatility game has been played on Wednesday. We need to see whether this volatility game will be on. Suppose if it is on, it has to come down to this level, and if it starts moving, that will be a great opportunity for you people, or otherwise it can stay within the range. So instead of trading in the index, you can look for the stocks which will give very good returns. Coming to the Bank Nifty is also played the same thing. It is after the Friday pump up. This is Friday move. Pump up, it is in the range. Already it moved up and it has made a leg down here. This is Monday, Tuesday, Wednesday. Lower lows. Lower lows, some sort of buying it. If I apply the volume profile, this is the value area, high and low, and the point of control is here. Some sort of, it was buying interest was here, point of control has been shifted over here. Some sort of buying interest is seen in this range. So, and all these buyers have been trapped. Probably, if the market dips down, it may rally above this level. The first resistance you have to note down is 56,863 and first support is 56,055 and second support is 55,387. This support will come into play only if the market goes below these levels. Until that, today's levels boundaries are within 56,863 to 56,055. That is around 700 points range you are seeing in the market. And the second resistance is 57,531. So note down these levels and trade wisely. Trade when the market gives you discount. Trade the levels, not the emotion. Okay, friends. Thank you very much. Nalnakshi Swami signing off.